Good afternoon, everybody, and welcome to our second virtual uranium conference of the week. My name is Derek McPherson. I am Vice President and Equity Research Analyst at Red Cloud Securities. I have with me on today's webinar Philip Johnson from the UXC, Roger Lamantry from President and CEO of UEX, Craig Perry, President and CEO of IsoEnergy, and Lee Courier, CEO of NextGen Energy. With uranium running over the last few weeks, we thought it would be important to have some experts like Philip on and have some quality uranium companies present, and so they've put together this series of webinars, and we've seen been getting a lot of interest. Format for today: Philip and I are going to do a bit of a Q&A / fireside chat on the uranium market. We'll take some audience questions as part of that, as time allows. Then each company will give a sort of a formal presentation. After each presenter, we'll do 5 minutes of questions live from the audience. So please type in your questions into the chat. Make sure when you do type in your questions, you note the company so that I can keep them straight, ask the right company the right question. And then at the end, if time permits, at the end we will do a little bit more Q&A on the uranium market with Philip. So. And just as by way of format, after Philip, the presenters will be UEX, IsoEnergy, and then closing off with NextGen. So I'm going to get the disclosures out of the way, and then we'll get right to it. To start with, for all three companies, there may be forward-looking statements made on this webinar. I would direct listeners to the cautionary note on page 2 of each company's corporate presentation located on each company's website. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research on each company for the company-specific disclosures. Now, with that out of the way, over to the uranium market. Maybe Philip, let's just to get started, and so people can get familiar with yourself and UXC. Maybe tell us a little bit about UXC, what you do, what you guys do, and who your primary clients are.
Sure. Thanks for at the outset. Thanks for having me, Derek. It's even in this virtual format, it's nice to be doing another Red Cloud event. Hopefully, in the near future, we can all do this like face-to-face like old times. So here's to hoping at least. But UXC is a nuclear fuel and reactor market data and analysis firm. We've been in business over 25 years, employ about 15 professionals in-house, and then have an external global consultant base. We're probably most famous for our leading products, our nuclear industry market reports. UX Weekly, without a doubt, is our most famous. Includes uranium prices and a market commentary, and weekly coverage of what's going on in the market. We run everything in the fuel cycle front to back, and that means everything from uranium market outlooks all the way down to spent and store fuel and things in between, from policy watch to all the market outlooks for all the sub-industries inside nuclear fuel conversion, enrichment, fabrication, in addition to a host of others. We are most known as the foremost nuclear fuel price reporter. UX U308 prices, spot and term, are widely referenced in many nuclear fuel contracts. Our clients, to the second part of your question there, our clients are uranium producers and exploration firms, converters, enrichers, fabricators, utilities, investments, banks, hedge funds, you name it. If they're in this industry, we can count them among our client base. As such, and I think that this is a really important point because we kind of get skewered quite often in this market for our position sometimes, but we have to be agnostic about price direction. Because we do publish the UX U308 price, and since that is referenced in countless contracts, and since that is used in the CME NYMEX uranium futures contract, we have every like talk about having skin in a game. We have the skin in the game to stay open and stay legitimate and honest and completely agnostic about moving price one direction or another. We have to call it like we see it.
Yeah, that's when you set the benchmark. That's kind of how you have to be.
Right.
It's almost being like an index provider. The I guess the on that pricing, and I know this is the first question from the audience. On maybe talk a little about, because obviously the long-term contract price doesn't move that often, and long-term contracts are very complex in the way they're constructed. There's not a set price. Can you maybe talk about how you guys, just briefly talk about how you guys get to the long-term contract price that you use? I think last published is 31, last I checked, which is now just slightly below spot.
Yeah, sure. So our current long-term contract price is also 31. And I also want it to be known that we aren't just, when you talk about the prices we publish, it's not as simple to just say like, you guys are just the spot and you're just the term price folks. You know, we're publishing a multitude of prices that all have their own independent factors and variables. If you wanted to dig into our price definition, our long-term price includes conditions for escalation from the current quarter, a delivery time frame of 36 months, and quantity flexibilities of up to plus or minus 10% in some considerations. We also, just to note, produce monthly average prices. They represent kind of like a floating average of what's going on in the market throughout the month. I've been asked before, you know, like, well, what if the spot price runs up like it's done right now? Well, then an appropriate price indicator to look at is probably our monthly average price. But yeah, that's kind of our bread and butter in the pricing game. We also publish 3 and 5 year forward prices. Those are basically an estimate for delivery prices in 36 and 60 months forward, taking into account market activity, other price indicators, just a host of other things, including origin specifications and quantities and whatnot as to feed those. So the answer is, and I'm sorry, it's quite complicated and there are a lot of moving parts.
Yeah, so that's helpful, because I think it's a bit opaque for a lot of the sort of traditional investors who haven't had the opportunity to read the pages and pages of description of how you get there. I guess maybe one of the other questions on spot is one of my questions as well. In your most recent monthly, you talked about 9 million pounds of transact in the spot market in March. Can you give us some flavor of what that looks like in historical context for a month of contracting, and then or a month of spot market activity, and then maybe what that looks like in, has that activity remained in April, and then maybe back that up again, and what do you see as the nature of the buyers, whether it's financial, utilities, or producers?
Sure. So there's a lot of moving parts there, so you might have to remind me of some of those. But
sure.
Regarding the first part, let's speak on the historical aspect. March's 9 million pounds is going to put us in the first quartile for highest spot volume booked in a month ever. Moreover, that month saw a historical new record for total number of individual spot deals booked at 76. That is tremendous. And probably most important to note there, most of that activity was booked during the last 2 weeks of the month, after Cigar Lake announcement and several other COVID-19 related suspensions took hold. To the next part of your question, thus far in April, we've seen spot volume through yesterday already surpassed March's very high total. April, as of last night, at my count, is about 11.6 million pounds under 64 transactions. And, April 23rd today. So we we got a couple more trading days left in the year here.
The third part was the nature of the buyers. Is it I guess the question really is it financial or sort of real end users?
I would say we've seen a mix of both. We do have a couple utilities like awaiting with offers outstanding, looking for a couple reloads. There have been other utilities just kind of testing the market. The real hard and fast truth is thus far become more and more important in this market. It's been a real interesting shift over the past say about year or so. The spreads between different conversion facilities is going at, between 50 cents and
Those pounds are, which I think we'll definitely leave that for the end, because I think we could go down a rabbit hole. Your first pass interpretation of what you think this means for the, maybe focus on the uranium market in general versus just specifically the U.S. suppliers.
Sure. I would say if you want to take like a holistic, very wide scope view of it, it's a net positive for the market, no doubt, and for as it leads to expanded nuclear power usage. It was also really nice to have our company's name in the report. That's always a good shot in the arm. I think it's also, it needs to be said, maybe like tempering some optimism. But our initial view is that this market impact is going to be somewhat minimal, at least nearer term. Because essentially when you consider it, the government buying uranium at a price from domestic producers indeed supports those producers, although it does not necessarily drive direct support to the wider market, at least initially. I think that's very important. So while that is indeed new demand, it's dedicated to new supply. Thus, there's really no change to the global supply-demand dynamic. One of the biggest, I think, boons for the market is the fact that this mystery, this question mark that's been outstanding for what feels like forever now, is kind of been solved, or at least it's been revealed to the greater market, and people can kind of, take it, interpret it, digest it, and then make their moves going forward based on it. Whereas before it was kind of like the boogeyman. So should the government proceed with the stated 10-year purchase program, the potential for that to support the market down the road, and namely the 2 U.S. producers that are selected, could be quite substantial. My understanding is that the DOE will run a public tender process to determine who those selected producers are. So time will tell. And at this moment, it is way too early to tell who's going to win any kind of tender.
Yeah, I think that's a fair statement, or what the tender looks like, or what the rules are for buying once it gets through, because it still has to be created legislation and turned and passed through that. So, but I think it is. I tend to agree with your view as you described it as the boogeyman. I was describing it as handcuffs. It takes the handcuffs off a lot of U.S. utilities to go out and fill long-term U.S. demand is uncovered in the long-term market sooner rather than later.
Right.
So that's what's good. I think that's what's good for the whole market.
Right.
I think with that, there are a number of questions on the uranium market. I didn't even get to all of mine, but I think we'll leave it there. And if you want to learn more about the uranium market at the end of the presentation, we'll do another 5 or 10 minutes of questions, time and audience allowing. So with that, we're going to turn it over to Roger, President and CEO of UEX, and he's going to give us an overview on the company. And then remember to give us your questions on UEX. Type your questions on UEX into the chat, and we'll ask him at the end of his presentation. Thank you very much.
Okay. All right. Well, thank you very much for having us present here. I'm very interested in hearing some of those questions about uranium space. And I want to apologize to the people who've been on the line. Uranium investors are definitely the toughest investor breed in the uranium resource space. And if there was any proof, having to look at those 5 faces on the screen for a while, for the last 10 minutes is proof. But I'd like to talk to you a little bit about UX, our Athabasca, exceptional Athabasca uranium portfolio, and our little sniff in the cobalt space. You've mentioned the forward-looking statements. Of course, please be reminded we're looking at forward-looking statements, and you'll have the opportunity to look at this in more detail after the webinar. Our competitive advantage, 4 key things: location, experience, portfolio, and a unique knowledge of certain types of deposits. We're Athabasca focused, both east, west, and actually in the northern part of the Athabasca Basin. Our team's got tremendous experience, with a tremendous amount of experience of discoveries under our belt. Because we were one of the earliest uranium companies out in the last cycle from 2001, we have a great land package and a unique knowledge, not just for Athabasca uranium deposits, but particularly for the emerging cobalt that we're finding in the Athabasca Basin. Solid leadership team. I myself spent 12 years at Cameco in various capacities, including being involved in certain discoveries there. Our board's been around long-term. Graham Thody, our chair, has been around since the very beginning. He actually was key in forming the company. All the key things you want to look for in a board are there in terms with decades of discovery in all the key areas. But what I think makes me the most proud of our company is our discovery group. Unfortunately, we've had a couple people go back to school recently, and it would be actually more pounds of discovery under our portfolio. But these 5 people here, 420 million pounds of uranium discoveries in 8 deposits. 2 of them are being mined or are in an operating plan of an operating mine. So this is a group that knows how to find things. But more than anything else, what is unique about our company is it's a sort of a portfolio unto itself. We have 19 uranium projects. We span from grassroots to development projects, a couple projects, the Horseshoe and Shea Creek, that are ready to move forward. And quite frankly, if depending what kind of investment you're looking for, you can invest in a development company and move up and down with the price and what their profit dynamics are. And a production company the same. And you can look for a grassroots company and hit the grand slam home run. Unique about us, because we have such a broad portfolio, probably too many projects for a company our size, it's that mid-stage resource portfolio you see here, where we have on each of those projects multiple targets that would be flagship sort of target opportunities for other companies, highlighted by Christie Lake, West Bear, and in Hidden Bay. But 2 projects, Horseshoe Raven and Shea Creek, that are ready to move forward when the market signals it's ready for more pounds. So, wrong button. One of the things I just want to look back at in the bottom right-hand corner of that graph, there's UEX in terms of its market price per pound compared to things out there. Everyone's undervalued or have been undervalued for years. But you can see there's a lot of room. And if you were to go into 2014, you can see where UX sits on a current, as of yesterday's market value per pound. There's a lot of room to move up with the vast portfolio of 99.5 million pounds we have in our portfolio with our 10 uranium deposits that are looking to move forward. On a market per pound basis compared to our peer companies, probably have the most room to move compared to most. And that's really valuable for that underpinning value of resources we have in our portfolio. But what I really want to bring to your guys' attention is, and I think that with 3 companies in the room, this is a great example of exactly where things go. Back in the last uranium cycle, new discovery companies always outperform the market. They outperform the development and production companies. And you can see in the heyday when the price of uranium was going from $10 to $53 a pound, with our discoveries at Shea Creek, we badly outperformed the market producers like Paladin. And if you look in the market, when you're looking at a flat to downswinging market, like through the 2010, 2011 range, Hathor did exactly the same thing and badly outperformed the group. And then Lee's company in a downswinging market still vastly outperforms performers. And so from an investment point of view, in an upswinging market or any market, you want to be in that company that makes the next discovery, and the proof's in the pudding. And that's where our portfolio comes to advantage. You're underpinned by a significant resource base with Horseshoe Raven and Shea Creek. You have exposure to grassroots projects that could make you that next discovery. But those mid-staged resource projects, those are the projects where we're sitting on a hot drill hole or a hot couple of drill holes in a couple different areas, or a hot alteration zone that needs to be followed up on, that they're much lower risk to the next discovery phase than maybe anything in the grassroots portfolio stage. And I think the one thing UX brings to the table is that ability to have the lower risk exploration upside underpinned by the resource base. So with that in mind, I'll walk you through some of the key projects we're looking at. Our current strategy isn't so much to move the development projects forward until we see a little bit more momentum in the price of uranium that says we need those pounds just yet. And it's to grow the pie by looking at and focusing on those mid-stage and resource level projects. So with that in mind, our prime one here is Christie Lake, located immediately north on a long strike of MacArthur River between MacArthur and Cigar. We picked up this project in early 2016, promptly added, there's 3 known deposits on there. 2 were known when we picked it up. We made a 3rd discovery, and we were pretty excited. We've got the start of a resource. We know it's not big enough yet. And what intrigued us is that we picked up this property and went, the trend where there's mineralization hasn't been discovered or actually properly explored. And that's when we found Aurora, and we thought, in 2017 when we found Aurora, we looked up to the north across the property boundary, and our major shareholder and Cameco, who owns the MacArthur property, it surrounds us on 3 sides, also made a discovery when, this is just like what we see in the Athabasca Basin, deposits that occur along a trend like pearls along a string, and we'll just drill on the trend and we'll find more deposits. And we were shocked in 2018, 2019 when that didn't happen, and the system just sort of disappeared. And from having a long experience in the Athabasca Basin, this is kind of unusual. We thought, what happened? Why did it disappear? And we did a geophysical survey last year and realized, the trend, the deposits actually is offset by the little pink line there. And we just got out of the field here and determined that this little low green blue area to the northeast are called Aurora North. No drill holes in it. Last year we tried to drill up into it when we actually found the extension of the alteration zone along this offsetting structure. We're pretty excited because that new red conductor through the middle of the blue area is a prime target for us to continue exploring along a trend, another pearl on the string, except maybe there's a little kink in the string this time. So this summer we'll be back up there drilling holes on probably some of the highest geochemical uranium enrichment in the sandstone that you'll see in the Athabasca Basin up in this blue area, which is still pretty much untested by any drill holes. So those are those example of a high quality mid-stage type project to target that we're looking at. We did make some other mineralized discovery to the southwest of this picture last year on the property. We're not even going to have a chance to follow that up this year. On our Hidden Bay project on the east side of the basin, we're looking at right up against the McLean Lake and Rabbit Lake operations, right next door to the mill. We have a huge land package. It's been explored from the early days, and I just put your attention to the little Eagle Point deposit slide, the top center of that position. Almost all the 1,800 drill holes that are drilled in generally less than 50 meters of sandstone cover are in that little teeny blue box looking for the classic unconformity deposit. But yet, when you look at all the new high quality discoveries made in the basin, of which a lot of them are being found in the basement rocks and in the hanging walls of the structures, and what we have at Hidden Bay is an opportunity to look for all those basement deposits and not just say, okay, where do we look for them, but look for hot spots that when they were looking for these classic unconformity deposits that lead us into the basement, they're kind of like, it's kind of like a sign or a little pathway saying, hey, follow it into the basement. We know where to drill with 14, 15 targets on the property that are just waiting for those kind of targets to be tested. And McLean Lake South target we did last year was exactly one of those where we found we're finding structures between mineralized structures that have yet to be tested right next to an existing mine. And we're finding all the signs that you want to see to look for a classic Eagle Point O2Next scenario, which our team has tremendous experience in being involved in finding in the past. And this is just one of those 15 targets that we're seeing on our Hidden Bay property. Shea Creek, it's one of our more advanced projects on the west side. It's the first of the west side discoveries, just south of the former Clough Lake producing mine and north of Lee's stuff at Arrow. What intrigues us is we have a mineralized system that's almost 3 kilometers long, and this is the last of the first of the discoveries in the last cycle. And what intrigues me about it, with an eye of looking for where these systems move and having experience working in a mineral environment in a mine site, is that the vast majority of the pounds that we're finding at Shea Creek are in the blue areas in the basement. And you can see along trend, there's very little basement mineralization found. And yet we know there's little clues where there's little purple perch mineralization are that you find basement deposits underneath those, and they're not fully tested. So we've been going through this with Orano over the last 8 months, and we're about to propose a program for them to do a drill program where we think we can take this 95 million pound deposit, of which the bulk and the high grade and best mineralizations in the basement, and look for those intersecting structured basement targets like Kiena under 58B. You can see in all the areas out there. And we think we can grow this resource substantially. It's 95 million pounds today, but we think we can grow it substantially because the basement targets have never been looked for. At Horseshoe Raven is our other advanced project, eastern side of the basin. It's 4 kilometers from the Rabbit Lake Mill, closer than their own feed is themselves. It's one of the shallowest deposits in the basin. It's 50 to 450 below surface, conventional mining, and it's relatively low grade, as you can see from the grade here, compared to your typical Athabasca deposit. But you plunk this down in any other jurisdiction in the world, the fact that it's off the basin margin with no water issues, can be mined conventionally without special radiation protection measures, it starts to become a very interesting project. But yeah, it's a poor cousin in terms of grade compared to what you'd see in the Athabasca, but anywhere else in the world, this looks really good. We've been doing some heap leach testing on here, and we're ready to move it to a bench scale test, but we need to see the market tell us that we need to move in that direction first. But it's one of the projects that can be ramped up very quickly when there's price support to do so. And then the other twist about our company is we do have a little foray into the cobalt area. We're trying to turn parts of the Athabasca into a cobalt district, and we have Canada's only primary cobalt deposit. We just put out a resource on it last week and grown it substantially. We have unique knowledge on how to make these types of deposits, and we can find them around the rest of the basin, and we have a portfolio to help that work. This will be an asset that we'll be trying to find a vendor for, or vend out through a spin out or a sale with the knowledge to enhance shareholder value for UEX. So with that in mind, we have other targets around West Bear to grow that deposit. We know it's not big enough yet, but it will, with another discovery similar size, we're probably hit close to that economic threshold. And we have oodles of targets just in the 2 to 5 kilometer district around it. So with that in mind, corporate information, we're about a $70 million company. Our largest shareholder is our founding shareholder, Cameco, and our founding CEO, Steven Sorensen. And we're well cashed up to get through the year and into next year. So once again, to summarize up, proven discovery team, experienced board. We have exposure to the discovery potential with lower risk, but we're backstopped by pounds. And we have a few little tricks that we know about that nobody else knows about, particularly in the cobalt space. So with that, I'll turn it back to you, Derek.
Sure. Thanks, Roger. I guess maybe we'll work backwards through the questions through your presentation, because first question from the audience is on West Bear. In particular, as you mentioned, needs more exploration. Where do you see is the amount of exploration dollars needed to make it viable from here?
Well, to get to where we were so far, we spent just about $5 million to get that first resource. So we're very, very cheap. The beautiful thing is we're talking about holes that need to be 50 to 75 meters deep. So very, very, you get a lot of bang for your buck here. So probably for another $4 or $5 million, we can test the immediate area that we need to look at on these other eight or so targets in the general area.
Okay. Now, obviously, you're looking at a potential ISR project in the basin, which is a relatively new concept, particularly that Denison is sort of pioneering for everybody to, maybe potentially putting out a study down the path there.
Sorry, I lost you for a little bit there. Could I get you to repeat that?
Sorry. On the you mentioned one of your projects has the potential for ISR development.
Heap leach, not ISR.
Sorry.
Yeah.
Heap leach.
Heap leach.
Okay. Have you looked at? Let me change the question back to what the audience member was asking. Have you looked at ISR for any of your projects?
No, not at this point in time. Okay. Not at this point in time. I think we'll wait and see how things pop out of Denison stuff. Our Horseshoe Raven stuff, heap leach is probably not. It's not probably amenable. And then, but it could apply. Who knows in some of their Western Basin stuff. But right now, we're not looking at that.
Okay. My apologies. Maybe potentially talk about where your 2020 exploration and development efforts are going to be focused for UEX. What's the plan for this year?
Two key areas is that target under Aurora North on Christie Lake. We'll be doing an active drill program there this summer. We were planning to start that in June, but I think under the current situation, we'll defer that until August. And then getting our program prepared with our partner Orano for Shea Creek for early 2021. That'll be our next thing, about a deposit expansion program within the footprint of the Shea Creek deposits are our two key focuses.
One of the questions relates to or your partner Orano at Shea Creek. How eager are they to keep moving that project forward? What's your experience been with them? Obviously, they have a unique situation in that their operating mines are starting to shut down, and they have fuel requirements or uranium requirements.
I don't think their financial troubles have been well publicized. So they put a lot of stuff on the back burner over the last 4 or 5 years. When you look at their portfolio of opportunities out there, they don't have a whole lot, and we're one of this Shea Creek project is one of their top 2 or 3. So I think with the current change in management there, they're looking again at opportunities that are in their portfolio, and this ranks up high there. They certainly have. They're very eager to see what we have to show them about what we've learned about those basement targets. So I'm very optimistic that we'll see them be interested in moving the project forward again in 2021.
Okay. And then maybe just lastly, a couple of questions on results and timeline. So maybe provide investors a little bit of an update on what kind of news flow they should expect from UEX over the next 12 to 18 months.
Yeah, so over the next 12 to 18 months, we're going to be doing you've just seen us put out the new resource at West Bear. We'll be doing the exploration program, drilling program up at Christie Lake. That'll be key going forward for the late summer work. And then the next focus will be once again what we're going to be doing at Shea Creek. We do have some drill programs at grassroots levels that Orano's doing on our joint venture projects in the Western Basin that we'll be getting results for here shortly.
Okay. All right, that's good to hear. Active on multiple fronts, I guess, is the objective. All right, I think with that, thank you, Roger, and I think with that we'll move on to our next presenter. So presenting next is Craig Perry, President and CEO of ISO Energy. So with this, we'll turn it over to Craig for his presentation.
Good on you. Thanks, Derek and Ashish and everyone at Red Cloud for setting this up. Very, very good thing to be doing and great timing to be talking about uranium. Of course, I'm just, and very pleased. I think this is the first time that I've presented side by side with my chairman, Lee, and the Next Gen guys. So very excited to be doing that. I'm just looking here at the moment. I see that Numico are reporting that the spot uranium price has just popped above $33. So it's trending in the right direction and moving along very well. So we're, a great time to be looking at uranium. Of course, it's very early days. I think, there's 441 operating reactors around the world today, and only 12 mines supply over 80% of that supply, that fuel for those reactors. And so what we're seeing, I suppose, is, the holes, the challenges in the supply side, writ large right at the moment. And of course, our observation on what's happening in the spot market today is that really it's only, we're at the earliest of stages of these closures of projects, of mines and mills. And so it's really just the threat of supply drying up and the announcements of those closures that have driven this market so far. As Philip said up front there, you're seeing a lot of product in the spot market today. I suppose we've got to find out what's out there in stockpiles. We suspect there isn't much. Our expectation is that the price will continue to rise strongly once that product dries up from the market. And of course, the market is fundamentally undersupplied at the moment. 194 million pound per annum demand side versus about 120 million pounds of supply. And of course, we've seen about 50% of that supply disappear in the last 2 or 3 weeks. So, we would expect that prices will continue to rise strongly. Do we see those utilities, particularly the guys in the US, start to panic as they did back in 2006 and 7? And do we see the price go up to above $100 a pound? I wouldn't be surprised, but certainly we'll be seeing stronger prices. And we know those key suppliers out there. You know, no one in the sector quotes all-in sustaining cost. But we think that a lot of the guys out there producing their all-in sustaining cost of production is probably north of $50 or $60 a pound. So, you know, we fully expect that prices have to rise substantially before we see that product start to come back into the market. So it's an exciting time, and it's an exciting time to be putting out drill results like you see here at our Hurricane discovery. So ISO Energy, of course, we're a spin out of NextGen Energy. Lee Courier, I helped Lee start NextGen back in 2011. Lee and the team had that tremendous success with the Arrow discovery. We had a number of assets out in the eastern Athabasca that weren't getting any love or attention or value in the portfolio in NextGen. So I moved my family across to Vancouver in 2016 to pick up the lead on our exploration efforts out in the eastern Athabasca. We spun those 5 properties out into ISO Energy in 2016. So we haven't been around long. And, you know, having that connection and being a part of the success that is NextGen has allowed us to do a number of things that I think a lot of our competitors haven't been able to do. And part of that is, you know, we've had great access to capital, and we've been able to get deals done with some of the majors. And that's what's led to our Hurricane discovery. So, you know, you see the core box there on the left, over 8.5 meters of beautiful, incredibly high-grade pitch blende mineralization, all of that black mineralization in there at the unconformity. And you can see that drill result, 8.5 meters at 34% U3O8. According to OPAX, that is the best drill hole in any commodity this year so far, even better than a Cisco's 2.5 meters at 900 grams per ton gold. So we're sitting at the top of that OPAX table, and all of those great drill results we've got on the right-hand side of the screen there, you know, sit very high up in that OPAX table. So OPEX ranking, I should say. So, you know, we're delivering some spectacular results. We've had a great summer drill program. And you know, we encourage people to watch this space. We've got more to come as we drill out this deposit, try to find its boundaries, and move towards announcing a maiden resource at some point over the next year. Just a little bit of a step back. Our approach, you know, we're very much focused on the Athabasca Basin. Of course, we're in Saskatchewan, which is the #1 mining jurisdiction on the planet, and the Athabasca Basin, no better place to explore for deposits. It's a tremendously well-endowed location. You'll just see there at the bottom of the screen, we talk about size of the prize, cost of the test, and chance of success. These are sort of, you know, exploration concepts and criteria that I brought with me from Rio Tinto. I spent 8 years at Rio Tinto exploration. And the Athabasca Basin ticks all of those boxes very well. You know, we're surrounded in and around some of the world's biggest uranium deposits and mines. Cost of the test of testing targets out there. Our Hurricane deposit's only at about 320 metres depth, so not too deep. And we're surrounded by all of that fantastic infrastructure that you need to do that work. And in terms of timing, of course, you know, we've been able to do a number of deals and stake a lot of ground in the eastern Athabasca in that tremendously prospective zone, in the darkness, under the cover of the darkness of this downturn we've been in. Now we're coming out of that and we're putting out great results into that market. And we're leveraging those strengths. You know, we've got a tremendous exploration team. Not only do we have that full support of Lee and the team at NextGen that have brought the world that great Arrow discovery, but we've also had Steve Blower join us. Steve was the head of exploration at Denison. He led the team to discover the Griffin deposit. He's now got another major discovery under his belt with our Hurricane deposit. Just looking at where we're located, Roger's given you a bit of an indication. We're in and around some of Roger's great projects there. Those orange polygons, of course, are our properties. That tan Athabasca Basin on the left-hand side of that map is the basin, and then the grey area is the basement under the basin there and under the unconformity. And you can see some of our projects. We're very close to Cigar Lake, for example, and sitting up there at the northern part of those properties is our LaRocca East property, where we've made that Hurricane discovery. Very importantly, of course, we're only 40 kilometres away from that massive McLean Lake mill, Orano's McLean Lake mill. A little bit about the strategy. It's very, very simple. Put your foot on as much of that eastern Athabasca as you can, and get in. And not much of that prospective ground has ever been explored for basement-hosted deposits. And what Lee and the team have done there at Arrow is demonstrate to the world that basement-hosted deposits can be absolutely massive, and they can have tremendous economics. And so we want to take that IP that we've got from that project and apply it to exploration under the unconformity into the basement there. So we're doing that. And then the other thing, of course, is that in 2006 and 7, all the way through to 2010, a hell of a lot of money was raised for the uranium exploration side of things, and a lot of that money went into drill holes in the eastern Athabasca there. And so that meant that a lot of first and second pass drilling got done, and we all ran out of money as a sector at the same time in 2011 with the Fukushima disaster. And so that meant that there's a huge number of holes, dripping roasts out there, if you like, of highly mineralized holes, highly altered holes that have never, ever been followed up. So again, put your foot on as many of those as you can and get in and follow up those drill holes. And that's exactly what we did at LaRocca East. We acquired that property off Cameco in 2018 for the princely sum of $320,000, mostly in stock. We had a drill rig on the ground 6 weeks after we announced the deal, and we announced the discovery of the Hurricane deposit 2 weeks after that. So, fastest route to a discovery that I've ever been involved with, and I'm just ecstatic with what the team have done there. And a couple of key things to point out here. We're not far from Points North. All of that infrastructure is there. Of course, there are a number of other significant projects like Rough Rider, but very importantly, we're only 40 kilometres away from Orano's McLean Lake mill. And of course, McLean Lake currently not operating in care and maintenance, but it's a mill that has 24 million pounds per annum of capacity. It's only seeing 18 million pounds of production now. And of course, depending on what happens with Cigar Lake come 2025, we know that Cameco have to invest upwards of $2 billion to keep that project going, and at a $50 uranium price, it will only give them an 11% IRR. So our suspicion is that there won't be, Cigar Lake won't continue beyond that point. So that mill starts to, won't have feed beyond that point. So Orano will be very keen to find projects to develop to put through that mill. So we're uniquely positioned in that sense. A little bit of the geology and the results we're getting. This is the property boundary here. You can see those very high grade hits we've had out in the western margin of the property. Very importantly, we've still got a lot of infill drilling over here. What we've defined is a 600 metre long zone, 8 to 11 metres thick, 40 metres wide, a very high grade mineralisation. We haven't closed off the deposit in any direction just yet, apart from to the west. So we've got a lot more work to do there. And I think, when we launch a summer campaign, you can expect some good results to come out of that. Another couple of, key points there. We haven't, because we haven't defined the bounds of the mineralisation yet. We don't have an ore grade polygon on there or much geology just yet. Of course, you'd expect us to be talking to the owners of the property over here, Orano and Cameco. So, we don't want to give too much away on what we're thinking here right now. Another important aspect, we're only down at 320 to 330 metres in depth. And of course, Derek, you mentioned there, ISR mining that Denison's been working on. The guy that conceptualised that, Peter Longo, we've brought him onto our team as a consultant to help us look at that opportunity. We think that's a great opportunity. And then, of course, Orano have their Sabre mining technology, the surface access borehole extraction of high-grade uranium deposits that they've been working on. And that's, we understand that our deposit could be amenable to that approach to mining. So there's a number of opportunities there. I'll just touch on with the last few minutes a couple of the cross-sections there, just to point out the fact that we haven't closed off any of these high-grade sections just yet. This is one of the westernmost sections. You can see there the structures that are the fluid conduits for this high-grade mineralisation. You can see that mineralized zone on this section here. You'll note these big structures that cut through the unconformity, and these are what you look for in trying to find a Cigar Lake type deposit. That's typical in Cigar Lake. And you'll see, very importantly, we haven't closed off any of those sections yet. So we've got plenty more drilling to do to close off the sections and to get towards reporting a maiden resource. You'll see the next section here. Again, more of the same. You'll see 7.5 metres there in hole 51. 7.5 metres at 14.5%. So we've got, we'll be drilling in and around there come summer, assuming we can put the team onto the ground safely and not impact other communities we operate. So, a lot more to come there. In terms of positioning and how we relate to some of the other great deposits, of course, you've got the beast that is Arrow out there that extends all the way nearly from the surface down into the basement. We're an unconformity-related deposit here at Hurricane, of course, and you see where we sit in relation to say Cigar Lake and MacArthur River. We're considerably higher up in the stratigraphy there than those deposits. So look, that's the situation there. As I say, safety. Health and safety of our people and the communities we operate in is paramount. So we're making all those considerations before we work out what to do with the summer drill program. I'm confident that we'll be back on the ground come July or August, and we'll be drilling there again then. Very importantly, you'll see on our capital structure there, our shareholders on that pie chart. NextGen sits there with 52%. I think I'll let Lee talk to that, but I think Lee and the board and team at NextGen are very happy with what we're coming up with here, and Lee would love to own more of this, not less. And certainly, Lee and NextGen have been contributing capital in all of our capital raises in recent times, and that sets us up in a very neat, if not unique, position for a uranium explorer today. We raised $7 million back in December. We've still got $3.5 million in the bank. We don't need to come back to the market anytime soon. And if you look at that share price chart on the left, we're trading about 57 cents today. So we're fairly flat on a 52-week basis. So these fabulous results we've had confirming Hurricane as a major new high-grade discovery simply haven't been factored into our share price just yet. So it's not too late to get set there, Derek. A bit more about the team there. I'll put up these handsome chaps. Lee, our chairman, Chris McFadden, of course, is the chairman of NextGen, and we've got a number of board members in common. So that connection with NextGen is all important and strong. So that's it, Derek. Thank you for that. What we want to be seen as. Whilst NextGen is clearly the standout development story for this uranium bull market, we want to be seen as the go-to uranium explorer in this bull market. And, we're exploring aggressively. We've got a fantastic new discovery. We've got a team that, has a sensational track record of finding and defining major uranium ore bodies. We're in the right location, and we've got a very tight share structure as well. Not much free trading stock out there. So our investors get good bang for our buck whenever we put out good results, or when the uranium price rises, and we're seeing all of that happening now. So there you go. Thank you, Derek.
Thanks, Craig. I think we'll just on the questions. We've got a couple from the audience. Obviously about Hurricane, which is a fantastic discovery, and congratulations to you and your team on that.
Thank you.
Maybe talk a little bit about you mentioned briefly preliminary resource. Can you talk about what you need to get to that initial resource now, whether it's meterage or drilling or dollars as it
or dollars. Well, look, I think we've drilled 53 holes into Hurricane so far. I think we've in addition to what we've got there, we've got some other exploration targets and potential near miss holes out in the east that we've got to go and test as well. So that it could get bigger from there. So, we're in a little bit of a conundrum that, Lee had going back 4 or 5 years ago. How much drilling do you do? How long do you continue this? I think, based on what we're seeing at Hurricane at the moment, another probably 50 holes will give us a fairly good indication of where we stand in terms of ore envelopes and resource boundaries. So I would say, we've probably got 2 more drill campaigns to do before we're in a position to announce a maiden resource. And that's, if that's 50 holes, that's of the order of $5 million to get to that point.
Right. And then maybe looking at that, obviously you mentioned that you have a neighbor directly to the west of you. Does that play into some of your thinking around the timing of a resource and potentially working with them to consolidate those properties?
Look, we know those guys very well because, of course, we've done a number of deals with them, and we've got we have Orano and Cameco there as significant shareholders of ISO as well, and I think they're very happy with what they're seeing. They're very happy to have a toehold on our share register as well, and are watching us very closely. It's quite clear to us. We make no bones about the fact that our last drill hole of this program was quite close to the property boundary. It's quite clear to us there'll be some high-grade mineralisation over there. So we'll keep talking to those guys and see. At the very least, we would encourage them to get out and start drilling and expanding on what we've got.
And then maybe lastly on that drill program, what have you got left from the most recent drill program as far as holes to come out? And then, when obviously, and the next steps as far as news flow, next 12 to 18 months for potential investors in ISO.
Yeah, sure. Look. One of the things we've done, we've been very active on the staking front, so expect some more news around that. We've put out the last 2 results last week from that program, holes 50, 52 and 53. So no more news flow there just at the moment. But in the next couple of weeks, we bring all the team together now, go through, analyse all of those results, look at what we've got there, and start to put together the program for the summer campaign. So you'll see some news flow on expanding on our views of what we've defined there, and then all of the sort of planning type and permitting type announcements as we come into that summer program. So I think plenty of news flow. And then, of course, once we hit the ground in probably mid to late July, news flow will be very strong. Of course, we'll be drilling in and around those very, very high grade hits we've had.
Yeah, that sounds good. Thank you very much, Craig. Appreciate the presentation and the time. So,
good on you. Thanks, Derek.
Continuing to move along for our next presenter, which is Lee Courier, President and CEO of NextGen Energy. With that, I'll turn it over to you, Lee.
Thank you, and look, welcome everyone, and we trust everyone who's listening is in good health and continues to be. NextGen Energy, and Craig gave us a beautiful introduction there with respect to the DNA at NextGen and ISO Energy is identical, and the group's now made 2 major discoveries in recent times, and I think that is something we're incredibly proud of as an organisation, and it's not just the technical skill, but it's also that focus on highly optimal use of capital in the exploration. There's very low G&A relative to the amount that is spent on exploration and development, and I really do think we have really gone a long way in setting a good blueprint for all investors in the space to invest with confidence, not just on the technical aspects, but also the highly efficient use of capital. With the uranium market, I'll just make a couple of comments about the recent the announcement this morning in the US. I think it's very, very positive in the sense that we now have a clear market, and US utilities will now have a very clear platform to go back and recontract. And we've got a historically unprecedented level of uncontracted demand. So this has been ongoing for about 2.5 years now, and it is good that the handcuffs will be off, as Philip was alluding to. And I think one of the most important aspects of that report and I've only had an opportunity to read the summary as well, is that it really did highlight the concentration of production in certain areas of the world that has shifted from the Western world to the Soviet states and Kazakhstan, etc. And I think it's important to realise that its main thrust was that we need diversification of uranium production, not heavily concentrated in just the one area. And so I think it's very good news for all uranium companies that are in the Australia, Canada, and the US, that there's very strong encouragement by the world's largest market in the US. It will continue to be the world's largest market well into this decade, and they want to see diversification of supply. So that's all I'll say about that. But NextGen and the Arrow project, you can see there, that is our project site. The up in the top left-hand corner is our world-class core logging facility. We've had visitors all around the world come to that core processing facility and completely blown away with just how we have designed that, and the quality control and assurance around all the data. Over 400,000 metres of drilling has gone through that facility, and it really is the framework for a lot of the work that we've subsequently done with respect to feasibility studies. Arrow project, as Craig alluded to, it is the world's largest uranium project in development and permitting, and we are in Saskatchewan, which is ranked number 2 worldwide in terms of a mining jurisdiction. It's got a very good history of uranium production, and the Saskatchewan government is very well versed in uranium. They're very familiar with it. And I've got to say, having gone through a permitting process myself back in South Australia, hence the accent, and that has a very good mining code, but Saskatchewan really does lead the world in uranium mining and permitting. As Craig said, we discovered this project in February of 2014 on Valentine's Day. We've drilled approximately 400,000 metres since that time. We've done a lot of geotechnical testing, hydrogeological testing, the metallurgical testing, and also acid rock and environmental monitoring. And we have reflected that in a PEA in August of 2017. We then did additional testing on all those fronts and released a PFS in November of 2018, and we're about to release our FS in 2020, obviously subject to the business environment returning to normal once COVID-19 has been addressed, and it will be addressed. We're seeing very positive signs of that. But what you see in NextGen's technical documents is that absolute consistency, and that is a function of the deposit being in the basement rock in a very competent setting and a very clean metallurgy. And the economic aspect of that is that we've got incredibly low operating cost and a very quick payback period, and a very simple mining method. It's very conventional mining and milling, and it does bode very, very well, which for an expedient permitting process, because we're just employing very well established mining methods. We do have an underground tailings concept that we've been working on considerably over the past 4 years, and the technical setting that Arrow's in absolutely lends itself to that aspect of the project. And it's an example at NextGen that we are looking to optimize this project, but overall with a fundamental objective of making this mine the #1 environmentally managed mine globally. And it's quite incredible when you consider that as per the pre-feasibility study, we'll have approximately 25% of the world's production when we go into production, if we were to do it at its maximum capacity. And yet it's coming from a mine which is just over 1,000 tonnes a day. So that's to give you that 1,000 tonnes a day for the non-mining people on the call today. That's the equivalent of about a 4,000 square foot family home. So it's not a very large area which we'll be mining every day, but making up a large percentage of the world's production when it goes into production. We have an outstanding community program as well, and that's been recognised by the PDAC of Canada with respect to our community programs and environmental programs. We enjoy very strong support from all the local communities in the project area, and that's a function since we started drilling in 2013. Our programs that have been focused on education, health, and wellness. And we've maximised employment in the project area locally at all times, upwards of 50-odd% when we've had a full drilling season on the go. And so we have an excellent relationship with the local population. We signed study agreements with them in December of 2019. And basically what that has done is encapsulated all the traditional land use and cultural studies to incorporate into our EIS for submission of the EIS with the feasibility study in under 12 months from now, again subject to the business environment returning to normal after COVID-19 is addressed. But at that time, we're going to have all the information that has been completely consistent since we discovered the deposit back in 2014, filed to the government, and these are documents which formally reflect all of that work that the team has done. And the government will be in a position then to really look at this project to execute it. And when you consider it's going to be a material component of the Saskatchewan economy's GDP, but also a critical component for the Canadian nuclear program, particularly heading into the middle of this decade and returning Canada to being one of the world's leading uranium producers. And when we've got a southern neighbour in the US consuming 50 million pounds per annum, yet producing less than one, you know, you can easily see the reliance that the US has on the Canadian country for sound nuclear fuel supply. We have an outstanding board as well. We have, as Craig alluded to, we've got Richard Patricio and Chris McFadden and Trevor Teely, who have been with the company since discovery. And last year we added Sybil Veeman, Carrie Howlett, and also Brad Wall to the board. Many of you will know Brad was the former Premier of Saskatchewan and is a huge supporter of the company with respect to the project, not just economically, but what we're doing in the communities in Saskatchewan and doing incredibly well. The investor-wise, we have one of the world's richest investors in Li Ka-shing through CEF Holdings. They own approximately 20% of the company on of NextGen, and his average entry price into the stock is around $3.30 Canadian. We're currently trading at about $1.75, and uniquely with that financing package, Li Ka-shing we have the voting support of CEF and Li Ka-shing with respect to company resolutions and recommendations. So we have a fantastic shareholder a fantastic 20% shareholder. All of our shareholders are fantastic and a part of this story in making such positive change in Saskatchewan. And on top of that, we have 38 million currently in the bank. We're well financed for completion of the feasibility study and the EIS and all of our running costs well through to the end of 2021. And as I mentioned, we've got fantastic shareholder support and in all of our shareholders with respect to our objectives. The road ahead, we have assays coming out from the 2019 winter drill campaign. We have an updated resource, most likely. We're going to include that into the feasibility study We're currently looking at maybe bringing that forward because all the drilling has been done, and we might be able to release that in advance of the feasibility study. We're still working on whether that's going to be an option. You're going to see appointments of additional team members to the board to the team of NextGen as well, which will be clear indication as to where we're taking this project and the speed thereof. And with respect to where we at with the technical work that we have conducted, well, we're about 100%. We had finished 100% of the drilling at Arrow for the mine plan as designed in the pre-feasibility study and the approaching feasibility study. We've done complete metallurgical analysis. We've done a lot of geotechnical and hydrogeological work as well, and environmental work ever since we discovered the project in February of 2014. So we are there from a technical and science perspective. And as I said, we're bringing all that information into the feasibility study and the EIS. And it's information that the government has been familiar with over a long period of time as we've progressed the project. So when we submit that EIS, we're in a really good position to set the government up to have a look and support the project. I just want to conclude with the Premier of Saskatchewan and his key ministers in the mining and energy and resources sector are incredibly supportive of NextGen and our project, and they're an absolute pleasure to deal with. And I might just finish with my couple of comments on the market. And a lot of you know I started in uranium back in 2002 in South Australia with the Southern Cross Resources. And leading into 2004, the uranium price was flat at between $7 and $10 a pound. And as soon as there was a bit of a tremor in the supply side of uranium, you saw the price go from $10 in 2004 up to $140 in 2008. And I just want to leave you with a factor as to what's different now to what was back then. Well, now the top 5 mines that were in production between 2004 and 2008 are no longer in production today. And so we've seen a bit of a tremor in the supply side back in, only less than a month ago. And the price has gone from $23.25 to $32.88 as of yesterday. And that shows you not only the talk in uranium, but gives you probably a sense of what really is available in terms of supply out there. And it feels very, very tight to us, though that price rise would suggest it's incredibly tight. But this isn't a one-off due to COVID. The stress on the supply side was prevalent for the last 3 to 4 years with mine shutdowns. You've seen MacArthur River. You've seen ERA in Australia, which was formerly the number 2 world's leading mine back in 2004 to 2008. And you've seen Rossing come to an end of its useful life and Langer Heinrich. As I said, my point is that steady production that was in place back in 2004 to 2008 when prices went to $140 is no longer there. And so I think COVID has brought some transparency to the stress on the supply side. And at a minimum, we're going to be feeling this well into 2021, even if everything turned back onto production tomorrow, which it won't. But we're going to feel it well into 2021 at a minimum, and I think a lot further from that as the supply stresses, which I mentioned have been prevalent over the last 4 years, really start to get exacerbated as we move forward. So I'll just leave it with that and hand over to any questions.
Sure, thanks, Lee, and we agree with you on the stress that COVID's brought. It's effectively brought forward the deficits that we were going to see in a couple of years. Are covered.
Yeah, exactly. It's just brought a bit of extra transparency, but I just want to make the point that these stresses in the supply side were already very prevalent. Travis and I and the team and Craig and Roger and Philip, everyone on this call, very, very aware of them. And it's just been a function that with financial players in the space starting in 2008, it really did disconnect the contracting of uranium off the actual cost of production. And what we've seen is that the cost of production has risen, spot prices haven't. And so you've now got this incredible demand and supply gap, which can't be filled overnight. And the consequence is an increase in the uranium price, and a sharp one. And we've seen the talk in uranium, $10 to $140 in just 4 years. And our view is that the state of production is nowhere near as what it was back in that period.
Yeah, absolutely. And I think we agree. Maybe focusing a little bit on next gen with these questions, but a lot of questions with respect to timeline and money from the audience, particularly, what's the timeline from here to production, and then how does that affect? Obviously, once the feasibility finishes, I assume your burn goes down a little bit because that part of the cost comes off. But maybe can you lay that out for investors in a little bit more detail?
Yeah, and look, very good question. And look, our spending was very, very high in 2016, 17, 18, and 19 when we were doing all the data, but it all finished in September of 2019. So with respect to our spending, it's been very, very low for the past 6 months now, and it will continue to be low because we're just at that stage of the feasibility study where we're bringing all of that data that we collected in 2018, 19 together into the feasibility. So we've got a very low burn rate at the moment, and we're well funded to complete the feasibility study and the EIS and have that lodged within about 12 months from now, and all of our running costs through that period. We have 38 million in the bank. Do we need to raise money? No, we don't at the moment. But we're not going to run the treasury down to zero either. We've got very good support with the likes of CEF and Li Ka-shing and those types of entities. And we haven't been to the market for over 5 years because we've had strategic investments, and I think you're just going to see that continue. So we are very well set up financially, and obviously as we get advanced the feasibility study and the EIS, there's opportunities to start early surface works at NextGen, and in doing so we would then raise more project financing at that time to start the surface works, etc. We're very confident that you could see us going into production in the middle of this decade, based on our assessment of the timing of the requirements. So that's not far away, and NextGen is beautifully levered to heading into production at that time, when you're going to see nuclear demand stay nice and steady at 1 to 2% per annum, with all the plus and minuses. But then with the advent of these small modular reactors, which is the single most function in the world that can change the quality of living to the greatest proportion of the world's population, coming in just as NextGen's going into production as well, it's incredibly exciting.
It is, and that's that was actually one of my questions with respect to timing, and mid this decade is very soon. It also fits perfectly with some of the large mines that are coming offline around that same time, and a new source of secure supply is going to be needed, which is why Arrow and NextGen are such a unique opportunity.
Yeah, and you saw in the presentation there's a picture of myself and Justin Trudeau. He came up to our project site into La Loche and acknowledged all of the good work NextGen was doing in the communities there, of which we were recognised with the PDAC award behind me. And you raise a very good point there. Come 25, 26, 3 years ago, Canada was the world's largest producer of uranium. Come that time, you can see that there's a motivation there to have another uranium production source. So I think it's a magnificent opportunity for the likes of the people on this call, UEX, ISO, ourselves, also Denison and Fission, and Cameco with their existing operations, to really be at the forefront of this nuclear renaissance, which is the only solution to having clean air. And I think with COVID coming in and the lockdown, people seen, holy hell, that the air does clear up when there's lower carbon emissions. And the use of nuclear power is the single most positive form of keeping the air clean. And we see that in France. 80% of the country is powered by nuclear power. Everyone loves going over there, drinking the wine, the cheese, and riding their bikes during the Tour de France. It is spectacular, and nuclear is the only way to do that. So we're up for a very exciting time, and all the companies in the uranium space, should feel very proud that they're going to be doing something incredibly positive for the planet for generations.
Yeah, I think they should also be very proud that they've survived the last 3 years, which has not been.
It's a resilient bunch that's on this call today, that's for sure. Like investors are getting highly resilient management teams, the ones that are in the uranium space, and they are resilient, and they do thoroughly believe in what we're doing is for a greater good. And Travis and myself and everyone on this call, I can speak for ourselves, we feel very privileged to be in the sector.
Right. Okay. I feel privileged to cover it. And I thank thanks Lee for being on, and I think we'll leave the questions on next gen there. So, we have run a little bit longer than I would like. So maybe we'll bring Philip back for 1 or 2 questions, because we've gotten a number from the audience. One of them was in particular, and I think where we finished off, Philip, was talking about the short-term market and what was going on with that.
Sure.
Have you guys in the stuff that you do seen anything fall over into the long-term market on that as of yet?
As of right now, not necessarily. Compared to the notable rise in spot prices and activity over the past 30 or so quite hectic days, the term market has been way more quiet in terms of formal utility contracting. At the start of the year, we were expecting about 44 and change million pounds of true long-term contracting. But given the onset of COVID-19, it's just, I hate to say it, it's too soon to tell. But to be honest, it's really not that surprising that utilities aren't currently focused on, oh, I got to go sign a base escalated deal, yesterday, and get it done. Right now, let's just take the United States for instance. We're having a massive amount of reactor refueling outages all occurring concurrently. And unfortunately, when you're a fuel buyer, you're also wearing many other hats that are spilling over into, outage support work or things to that degree. So their attention right now is elsewhere. And if you've been paying attention in the news, there's been numerous announcements to the fact that outage contractors going to and from plant sites have had to go so far as to receive federal designation as important essential workers, and several utilities have begun quarantining those employees so they don't bring anything into the plant. Moreover, the NRC has been kicking around, continuing to extend worker on-site time, just so that you're not swapping in and out new employees at job sites to bring potentially a bug to the plant site. So yeah, I think most are pretty well covered for the next 2 to 3 years. So right now there's no real long-term contract rush, even though spot prices are higher. We actually have heard from a few recently that think spot price or term prices and spot prices are going to fall back, that just their gut feeling. So they don't really want to get caught with something that might reflect a temporary price spike where they're paying a higher base price to begin with. But I think this is also really important given the just absolute chaos in financial markets around the world. We have seen a lot of quieter off-market discussions for midterm delivery, kind of like superseding what we may have expected for traditional term delivery. So we'll just kind of have to see how that shakes out. Again, everything that's happened has happened in 30 plus days. It's for a market that sometimes moves at a glacial pace. It's been breakneck, to say the least. So we're gonna have to do this call again in a couple months and see how she shook out.
Right. Yeah, I think that's a fair point. Now maybe touch on the impact of the COVID is having and the refuelings, et cetera. Maybe talk a little bit about the short-term dislocation as far as what all of this short-term supply coming offline means to the balance of the market right now. And then
Sure.
obviously this is just a deferral of production, but maybe talk about what this short-term supply means and how much it changed the market, this year's market, as opposed to what you were forecasting.
Right. Okay. Yeah. So just for those not paying super close attention, a thumbnail sketch, Cameco comes out initially suspending cigar for 4 weeks and then later places that on an indefinite suspension. Meanwhile, in Africa, governments in Namibia and South Africa basically came out and said, we're going to lock down our mining sector, but then we found out that it wasn't as locked down as they maybe initially reported, but we do see production sliding there. And then in early April 7th, I think, because Atomprom announced that they're going to cut staffing levels at their several of their Kazakh ISR mines, which they say could lead to a reduction of up to 4,000 ton ESU. So that's like 10.4 million pounds. And that's on a countrywide level, not just Kazatomprom. But I think it's important to note that roughly half of that Kazakh production number is actually marketed by their joint venture partners in those projects. So these Kazakh cutbacks will clearly affect a number of producers. You can go down the list of all the heavyweights in the industry: Cameco, Orano, Uranium One, several others. We at UX continue to revise and adjust our expectations based on the latest news out of Canada, Namibia, South Africa, Kazakhstan, of course. Based on an assumed 3-month outage of Cigar Lake and the Kazakh projects, plus an adjustment to the initial projections in Namibia and South Africa, especially because those did not completely turn off as other projects have. Our cumulative production impact shows between 13.1 to 17 million pounds down this year. For scope, that's a total reduction of between 9 and 12% of what we originally forecast. Moreover, I really think this is the most important. We're not epidemiologists and don't claim to be. The potential does exist for suspensions and curtailments and other things to upend plans beyond the 3-month window that we're currently forecasting, should the situation worsen. Now, everything we read, there's seasonality to it, but it is a first of a kind undertaking that's happening around us. And once again, all of this has all happened in less than 30 days, or round about 30 days. So once again, we might need to do this call again later this year to really capture things a little bit better once we have a better handle on it. But yeah, we're talking about a 9 to 12% cut just based on our current projection.
And where does that put the balance of the market? Does that push you? I think if I remember correctly from the most recent report, it was you guys were about balanced for this year.
Yes.
And then so that pushes basically for going from about balanced to deficit. When every pound that isn't being produced now is pushing deficit, basically.
Sure. And once again, I can't say it enough. There is the potential that production decisions will be made above and beyond what's already been made to the curtailment side. We just don't. No one knows. So we'll have to see how this shakes out.
Okay. I think with that, and I think duration is always the question, but I think with that we're going to leave it here. Thank you everybody for participating. very good audience participation, and it's very much appreciated. Our next set of webinars here at Red Cloud are going to focus on the other yellow metal. It's not quite doing as well this year, with Vista Gold presenting on April 28th, followed by Group 10 Metals on April 29th. So stay up to date on all our upcoming webinars. Or see the replays of this event and others. Please go to our news and media page. Ashish will post the link on the chat, and look for events to those future invites. And thank you everyone for being here. Thank you all for all our presenters for being on. It's I know it's an undertaking to spend this time, and I appreciate the 100+ people that were on for the full hour and 25 minutes of this presentation. Thank you everybody, and have a pleasant afternoon.
Thank you.
Have a good one.